Good morning, traders, and welcome to BCR's morning market outlook. First up, let's talk about the US dollar. The DXY has held above 99 as markets continued assessing the prospects of a US Iran peace agreement amid renewed Middle East tensions. President Trump stated negotiations to extend the ceasefire and reopen the Strait of Hormuz are ongoing. Although the Secretary of State Marco Rubio warned that a final agreement could still take a few days. Treasury yields continued to soften as markets reduced expectations for a near term Federal Reserve rate hike, while attention now turns to the upcoming US PCE inflation data. Technically, the dollar index remains above key support around 98.67 and 98.58, while resistance is seen near the 99 psychological level. Next up, let's have a look at crude oil. WTI has fallen more than 4%, slipping below $89 a barrel as optimism around a potential US Iran agreement pressured energy markets. Reports suggested a draft deal to end the conflict is being discussed, although both sides continue sending mixed signals and the Strait of Hormuz remains largely closed. Markets remain focused on the reopening of the Strait, which carries roughly 20% of global oil and LNG flows. Technically, crude has found support around the key $88 region and the 75-day moving average near 88.48. Resistance is seen near 93.83 and the 20-day moving average at 97.2. Next up, let's have a look at gold. Gold has been trading near $4,500 an ounce as cautious optimism over a possible US Iran peace deal continued to weigh on safe haven demand. Despite renewed military tensions, gold remains nearly 15% below levels seen at the start of the conflict as elevated inflation concerns continue supporting expectations for a tighter monetary policy. Technically, the outlook still remains quite weak, with selling pressure building below the key Fibonacci level at 45.41. A move lower could expose support around the 44.54 and the 44.36 level, while strong support sits near the 200-day moving average at 43.88. Lastly, let's have a look at the Australian dollar, which rose for a second straight session, trading around 71.60. Although gains were capped after softer Australian inflation data. Australia's annual CPI came in at 4.2%, which was well below expectations of 4.4, while core inflation also eased. Technically, the Australian dollar remains below the 20-day moving average at 71.89, but above the 50-day moving average at 71.02, keeping the broader structure neutral. Resistance is seen near the psychological level of 72 cents, while support sits around 71.24.